Good morning, everyone. We'll start this podcast in another 30 seconds. Once again, very good morning, everyone. Welcome to Prepare with William O'Neill India. This is Rajasekhar Kongari, Equity Research Analyst. Before we go ahead, disclaimer for this podcast is that whatever stocks we discuss are only for an educational purpose, should not be taken as an investment advice by ourselves. As always, we'll start this podcast with current market status by looking at Nifty's daily chart and the key levels we are looking at, and regarding model portfolio also we'll discuss. Nifty had a highly volatile week last week. You have seen a huge gap down followed by gap up, and then 2 days of muted action. This week I can see it started on a good note, but in the next two sessions it closed with a negative bias, and it also breached its 21 DMA. However, in yesterday's session, Nifty had a very good gap up opening, mostly because of Nifty Bank, which gave very good support to the overall market. Stocks like banking stocks, financial related stocks have rallied 3 to 4% yesterday. So they have given very good support to the overall market. So the Nifty also closed nearly 1% higher in the yesterday's market. During the day, even though it was a weekly expiry, relatively it was a less volatile session. It moved in a zigzag manner. Towards the end of the session, we had a good buying, and Nifty closed near the day's high. You can see on closing basis, it closed almost near the day's high, which indicates a very strong bullishness in the market. Demand is higher compared to the supply. Regarding market status, we are continue to be in the confirmed uptrend. Confirmed uptrend is when our exposure towards the market will be highest. Number of stocks in the model portfolio will also be highest when we are in confirmed uptrend. However, to track the weakness in the market, we use distribution days as a tool. Distribution day is when Nifty declines 0.2% more on volume higher than the previous session. Regarding 0.2%, it's considered a high fall, and regarding volume higher than the previous session indicates more selling pressure is seen in the market. That is the reason we use these two parameters, both price and volume action, to determine the weakness in the market. After changing market status to confirmed uptrend, we had two distribution days added to the market. However, one of them has expired last week. Current distribution day is at 1. Any accumulation of distribution days around 3 to 4 or 5, that indicates accumulated weakness in the market. So by that time, it might also reach its key moving averages. That is when we change the market status to under pressure. Once we are in under pressure, our additions will be more cautious. So we'll be adding only highly conviction stocks which are giving highly conviction breakouts as well. Alternative buy points will not be considered as such once we are in under pressure. Also, profit booking will be seen in under pressure scenario, because most of the stocks will also be not performing much and also be moving sideways. By that time, you like to book out profits in those stocks as well. Some of the key macro and stock specific news which happened overnight and today are European Central Bank, that is ECB, has raised its key benchmark interest rates by 75 bps for the 19 countries which use euro as currency. This is the first time they have increased their interest rates by 75 bps since the introduction of euro currency. Normally, they used to increase interest rates by 25 bps. So this is very rare case. This is mostly because of inflation, which is a global scenario, global theme, which is happening for the last 6 to 7 months. So US market also we have seen recent times. US Fed also increased their interest rates, and also we are expecting another 75 bps rate hike in this month as well. Coming to Indian markets, Government of India has imposed a 20% export duty on various grades of rice. This is because to cool down the local prices of this rice because of lower than expected rainfall in West Bengal, Uttar Pradesh. The scarcity has increased, so the price might increase, because of which government is imposing export duty on rice. Previously, it has also imposed restrictions on wheat and sugar exports, mostly because of keeping domestic prices intact. Other stock specific news is Vodafone Idea, which has a due payment of nearly 16,130 crores to the government, mostly because of AGR dues. So the finance ministry has approved to convert this debt to the equity in the company. If that happens, there is also telecom department which needs to give a final approval to make this transaction happen. If this happens, the Vodafone Idea's overall debt will come down by this amount, which is a very good sign for them. Currently, they are looking for fresh funds to expand their 4G services and as well as to introduce their 5G services. Indian market has become Indian equity market has become fifth largest in the overall world, because mostly because we have been very resilient compared to our global peers. They have been under pressure because of pandemic, which started because of pandemic, and then followed by geopolitical tensions between Russia and Ukraine. So Russia and Ukraine, this led to many supply chain constraints. If you look at European nations, gas prices have been rising sharply because Russia has stopped their supply to the European nations. A similar scenario is there everywhere globally. So the global markets are not doing pretty much well. However, Indian market is resilient when compared to our global market. This is the reason our Indian equity market has also jumped higher to the fifth place. Recently, we have seen Indian economy also becoming fifth largest. This is in terms of GDP, which is also a very good sign. And India's share in global market cap has hit all-time high of 3.5%. This is regarding market cap of India when compared to the overall market cap of global global indices from 2.05% in May 2020. And this also indicates a very good demand for the Indian market globally. And when this and this also helps us in attracting fresh foreign institutional investors because India is being resilient in very turbulent times. Regarding institutional activity, you can see FIS have turned net buyers. They have almost bought 3,000 crores of equities in Indian market. And also domestic investors have sold a less quantity, around 200 crores of equities when compared to 3,000 crores of FIS buying. This is very negligible. Global markets, US markets overnight have closed with positive bias, 0.6 to 0.7% high. You can see Dow and Nasdaq closed 0.6% higher. S&P has closed 0.7% high. Asian markets are also trading with positive bias. Shanghai and Nikkei are trading around 0.3 to 0.4% higher as we speak. Kospi Korean exchange has closed today because of harvest season, which is going on in South Korea and North Korea. So the market is closed on today and Monday as well. SGX Nifty is also indicating a good opening for Indian market, around 100 point higher opening. Nifty closed around 70,800 in the yesterday's session. So we might see 70,900 at the opening. If that opening gain is sustained, then we might see Nifty touching 18,000 level as well in the today's market. If that happens, it is very good sign for the bulls, and a fresh rally might happen in Indian markets. Talking about the chart of the day, we have picked the NTPC, which is a major thermal power plant power generation company in India. This has been in our watch list, buy watch list since 1 or 2 weeks. You can see the currently stock is trading near its ideal buy range of its stage 2B double bottom base. It had a very good rally from 130 level. It is currently trading near 220 level, which is a very sorry, from 130 it has trading at 160, that is around 30-point rally, which is a very good sign. From the right side of the base also, very they have been very good candles on stock closing higher. There have been very good volumes on the volumes as well, which is a good sign of accumulation happening in the stock. Ratings wise, it's a very good stock. You can see EPS of 82 indicates a strong fundamental profile. Price chart is slightly lower, but it's not so much lower. It is okayish when compared to other stocks. Accumulation distribution rating, which is very high, it is at A plus. This is because the blue candles have been on the above average volume, and the pink candles are at below average. So definitely A by D rating will be higher. Talking about number of funds, you can see a very gradual increase in the number of funds. That is also very consistent. You can see every quarter number of funds invested in the stock has increased, indicating fresh funds are taking a position because they are liking the story of this stock, which indicates a good sign for going forward. And a disclaimer here is that we are not advising to buy at this current moment or sell. We are just trying to bring forth our ideations, how we look at our, how we look at charts on only lens, so that they will be helpful to viewers here. Thanks for joining today's pre-bell. Have a good trading session.